Is CrowdStrike stock a buy at current valuations? I want to answer that question in this video, looking at the company's revenue, profits, its shareholder dilution, cash flow, and valuation. So let's jump right in, starting with revenue. And over the last several years, we could see CrowdStrike's revenue growing nicely from a little under 400 million all the way up to 2.6 billion in less than 5 years. Now, I suspect this company to continue growing for the next decade as demand for cybersecurity services continues to soar. It's no longer a nice to have, it's just something that companies must have nowadays. And on top of that, regulators are increasingly making it mandatory. And so, cybersecurity, I'm bullish on the industry. CrowdStrike should capture a nice tailwind from the growth in the industry and continue growing revenue nicely over the next several years. But now let's look at if the company is growing profitably, and the answer to that question is no. Looking at CrowdStrike's operating income over the trailing 12 months in the last several years, it's experienced volatility, right? It was on track to boost profitability and reach positive profit margin, but then it turned back downward. And now it's back on track again, heading in the right direction. So it's not showing a clear, consistent progress towards profitability. It's choppy, it's up and down. And so I can't say with confidence that the company can reach profitability in the near term with its current prospects. Yes, I can say with confidence that revenue will grow, but I can't say with confidence that profitability will grow. The next thing I wanted to look at is cash flow from operations. And I do this a lot, especially with tech companies, because tech companies like to use stock-based compensation to incentivize some of their talented employees to join the company, because these talented employees, they want a share of the upside. They want a share of the increase in valuation of the business if they join your company. They don't just want to work for wages, which are static and not exposed to the upside, to the huge upside. And so this is the case here with CrowdStrike, and you could see consistent and steady progress in growth in cash flow from operations, being break even around 2019 all the way up to 1 billion in cash flow from operations in the trailing 12 months. So this is great news for those interested in CrowdStrike stock, in investors and shareholders. So if the company is using stock-based compensation, I wanted to see how much it's diluting shareholders. And to see that, we look at the average diluted shares outstanding. And you can see CrowdStrike has increased the average number of shares outstanding from around 170 million in 2019 all the way up to 242 million in the most recent update. And even just in the last couple of years, from 2021 to 2023, it went from about 220 million shares outstanding to 242 million shares outstanding. And so you might say, why is this important? Why is this metric important? Well, it's important because if the company does reach profitability, those profits are going to be shared among more shares. Let me say that again. Those profits will have to be split among more shares. And so the earnings per share will be lower if there are more shares outstanding. And so all else equal, you would prefer a company not dilute shareholders. You would prefer a company achieve its growth and profit targets without needing to dilute shareholders. Not all companies can do that. And so if you're using stock-based compensation, you've got to at the same time use some of your cash to buy those shares in the market and not issue new shares so that you're not diluting shareholders. But if you're not generating strong cash flow from operations, or if you feel like you're going to need that cash, you're not as aggressive going out in the market and buying those shares back. You'd rather issue new shares and conserve your cash. And so that's a decision CrowdStrike is making. The next thing I wanted to look at is valuation. And CrowdStrike is trading at a forward price to earnings. And this is looking at the forecasts for its earnings over the next 1 year. It's trading at a forward price to earnings of 46.92, which is near the lowest this stock has traded for according to this valuation in some time. So given the company's excellent growth prospects and its excellent cash flow from operations, I'm going to say yes, this stock is a buy, understanding that the risk here is the lack of profitability and the increasing shareholder dilution. However, offsetting that is the strong industry growth and CrowdStrike's position in the industry growing along that over the next decade. I like those prospects, and so I'm willing to pay this valuation for CrowdStrike stock. So yes, I can say this stock is a buy at current valuations.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.